Imagine a time when getting a loan wasn't about a number. It was about your name. If you wanted credit in the 1800s, there was no FICO score, no online approval, no automated decision. You walk into a bank, sit across from the loan officer, and hope they trusted you, or at least knew someone who did. Today, that process takes seconds. Your 3-digit score flashes on a screen, and that single number can determine whether you get a car, a house, or even a job. But how do we go from handwritten notes and personal judgment to algorithms deciding our financial future? This is the untold story of how credit scores were invented. In the early 1800s, lending was built entirely on personal relationships and reputation. If a shopkeeper or banker didn't know you personally, they'd ask around. Credit decisions were made through letters, gossip, and word of mouth. In 1841, Lewis Tappan founded the Mercantile Agency, the first organization to systematically collect information on borrowers. They kept ledgers filled with handwritten notes about individuals and businesses. It was subjective, often inaccurate, and heavily biased. As the U.S. economy grew, banks began to lend more money to more people. But relying on personal judgment led to serious issues. Two people with identical finances could get very different loan terms. Discrimination was common. By the 1960s, banks and retailers needed a system that could measure credit risk objectively and mathematically. In 1956, two men, Bill Fair and Earl Isaac, founded a company called Fair Isaac Corporation, or FICO. Their idea was revolutionary. Use data and statistical modeling to predict how likely someone was to repay a loan. By the late 1950s and early 1960s, major lenders began adopting their scoring models. In 1989, the modern FICO score was formally introduced, becoming the industry standard. Credit reporting agencies were evolving. Originally, they were small local offices with handwritten files. Over time, these merged into 3 national credit bureaus: Equifax, Experian, and TransUnion. By the 1970s, computers began to replace paper ledgers. In 1970, Congress passed the Fair Credit Reporting Act to protect consumers. Let's look at how things actually worked before and after credit scoring. 1960s, before FICO. You wanted a car loan. The decision depended on your job title, neighborhood, and who you knew. Today, you can apply for a car loan online in minutes. The lender doesn't know your neighborhood or family. They know your credit score, income, and debt ratio. The modern process is faster and more consistent, though still not perfect. A credit score is more than a number. It's a prediction. It estimates how likely you are to repay borrowed money on time. Lenders use it to make quick, data-driven decisions that once took days or weeks. Beyond lending, credit scores now influence rental applications, insurance rates, and job offers. FICO isn't the only player anymore. Other models like VantageScore now compete for accuracy and inclusivity. Newer scoring methods include people who were historically credit invisible. Alternative data like rent payments and utilities are starting to count. Even with its advantages, the credit score has its critics. Supporters argue it created fairness, efficiency, and consistency. Critics note it can disadvantage people with limited histories. Regulators, fintech companies, and advocates continue to push for greater transparency. The credit score is a modern invention, younger than the internet or color television. In less than half a century, it's become one of the most powerful numbers in our lives. But behind that number is a story, one that began with handwritten notes. Understanding how it came to be helps us see what it really is. A reflection of trust and technology, from handshake agreements to algorithms deciding our future. So the next time you check your credit score, remember, it wasn't always this way. It took 2 men with an idea, a century of experimentation, and a shift from reputation to data. From handshake to algorithm, this is the untold story of how credit scores were invented.